Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Today is an epic day, folks. We have the Federal Reserve about to cut interest rates by 25 basis points. You might say, how do I know? I don't know for sure, but let's just say the odds favor it by about 99%. So you get about as good as you can expect from the odds markets for a 25 basis point cut. Now, again, if we look at this, folks, what are we seeing here? The Federal Reserve will be out at 2 p.m. with that statement and that rate cut, followed by a 2:30 p.m. press conference from Jerome Powell. Now, the markets, honestly, I doubt they react that much to the actual cut. That's what we're expecting. It's all about how hawkish or dovish Jerome Powell is during his press conference. Is he going to raise the issue of the markets that are at all-time highs with valuations beyond belief? Or is he going to just go on with his work and just say, hey, listen, everything is normal. We're still on pace to cut in December and potentially January. All right. Now, after that, so there's more, right? After we get that news, we're going to see after the bell today, we have Google, Microsoft, and Meta reporting earnings. So that's $3 trillion in companies. Well, 3 individual trillion-plus-dollar companies that'll be reporting earnings. That's going to be epic, folks. Now, the kicker here is this. We're seeing the valuations of Nvidia. Nvidia today, where it's standing, is going to close or be at $5 trillion in terms of evaluation. So we're going to look at this type of stuff, guys. This is pretty epic in terms of $5 trillion on Nvidia. Yesterday, Apple hit $4 trillion. The two of those companies combined $9 trillion, and then we'll see what these other trillion-dollar names say after the bell. Let's go into the markets here and take a look at charts. The first thing we see is the S&P futures. I always do a check-in on the S&P first because I want to get us grounded to where the markets are. Yesterday, this was yesterday's price action. You can see early in the day, we had a little minor selling pressure. And then once the faucet was turned off from the institutional exiting, we saw the markets go vertical to the upside. A lot of this was based on basically Nvidia had a big investor day where they announced major deals and all this. And this is what started to rally Nvidia higher towards that $5 trillion. We did see some profit taking here into the end of the day. The markets on the S&P closed here, and you can see we are trading up about 15 to 20 points on the S&P headed into the open. Now, the big chart for me is this chart, folks. This is your weekly S&P daily weekly S&P chart. Now, the reason why this to me is important is this should be beyond belief an epic level of resistance right up here, right? So if we zoom in on it, we can see yesterday we closed a fraction above. That's okay. That doesn't really concern me if we're above this level. It's more monitoring once we get through today and then tomorrow with the President Xi and President Trump meeting. Are we still north of this level? Is the market able to hold up on the price of the S&P to stay above these two trend lines? And again, notice one is a parallel that starts back at the low of COVID, connects through the bear market low of 2022, this pullback level in 2023, and the liberation sell-off in 2025. The high of the parallel matches perfectly with the high of the 2021 bull market. And that's where we are right now, folks. We're right up into that level. The secondary trend line goes from your low of 2023 through this low here in 2024 through this low. And then you can see how it struggled right there against that line. We had this bigger pullback right here. Now we're right piercing that level as we speak. So again, to summarize, guys, we're watching this level into end of week. We have obviously big earnings today. We have the Fed today. Tomorrow, the president is meeting with President Xi of China. Is there going to be a deal? And by the way, I'll just point this out. It's not a coincidence. I repeat, this is not a coincidence that the stock market and the Fed, so the Fed decision today, it's not a coincidence that this meeting with President Xi was scheduled for the day after the Federal Reserve. Now, why do I say that? Well, because this is what we've seen from Trump in the past. All right, if it's not a meeting with Trump on a trade deal, it's a major announcement that's geared from Nvidia on investing with OpenAI, or it's another major deal to make sure that there's essentially, it's a put option, right? It's a put on the market to protect it from a dump if the Fed decides to be too hawkish. Because listen, we know that President Trump can't control Jerome Powell. Powell has made that clear. So what is Trump doing? He's putting these specific meetings where he can come out and say it was the greatest meeting ever. We have a great deal on trade. He's putting it one day after in case the markets drop, then he can get them to go back up with positive news with China. Very interesting. The other interesting aspect is yesterday market breadth, how many stocks were up to how many stocks were down, was the worst. I repeat, the worst on an up day that we have seen since 1990. In other words, in the S&P 500, 500 stocks in the S&P, 398 were down yesterday. Think about that. Yet the S&P still hit a new all-time high. How the heck does that happen? Just look at the trillion-dollar names, specifically Nvidia. When you have a company that's $5 trillion in market cap and is up 3%, that is going to literally drag up an index, even of 500 stocks, and do its best to keep it green. And that's what it did yesterday. But I did think that was an interesting stat, is that the overall health of the underlying market was very, very poor yesterday, the worst since 1990 for an up day. Yet markets, again, were able to make a new all-time high. Let's see how things go today. All right, let's go over to the NASDAQ. This is one level I'm watching on the NASDAQ composite. Yesterday, we talked about the M2 money supply. We did tag that level, so that's a major factor I'm now watching with M2 money supply versus where we were in the dot-com era with M2 is now equal to where we are currently on the NASDAQ with the high, much, much higher M2 money supply. In addition, I'm watching this trend line in the short term. We might even open right into this 24,000 marker here, which again is connecting all of these recent lows right along here, right? And again, should be a level for us as technicians to watch. Can the market push through it? It does seem like the market's unstoppable, but at some point it's going to have to take a breather. Then we'll see if it's something more. The 10-year yield, don't expect much on this until we hear from the Fed. But once we hear today on the Fed, the question is, are we going to start to really break down? I would say that if you take this trend line here, this is very clearly to me, we have a trend line, we've broken it. This to me looks a little bit like a bear flag that could denote a slightly dovish tone from Jerome Powell today. We'll see. Or maybe again, if he's hawkish, it goes to a retrace to the scene of the crime right in here. All right, we got to talk Nvidia, guys. Nvidia is trading at 208.38 pre-market. This is now officially, as of pre-market, a $5 trillion+ stock. Amazing to think. I don't think any of us really, I can't comprehend $5 trillion, that's for sure. But what am I watching? I have a couple trend lines here. We're going to be opening right into this trend line zone. Notice the trend lines connecting through low, 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 low. Then we gapped below it. We retraced into it, and then we fell down, right? Now we've come back up. We hit it. We've pulled back. Look at these two lines that are parallel. We had this one, which is now parallel to this one. These two are coexisting right up here going into today's open. And this is going to be interesting to see. Sometimes stocks top out at major even numbers, whether it's a stock even number like 500 or 300 or 200, which is what Nvidia is piercing, now, but also they can top out at key market caps. And 5 trillion could be something to watch. So I will be looking to trade Nvidia on the short side as a day trade today in the live day trading room. Now let's get into some earnings. STX reported earnings yesterday after the bell. This isn't a huge company, but it is a chip company. And again, positive news there. The stock is up a little bit, but you can see again, this is where it was trading basically 2 days ago. It's right back to those levels. I just wanted to point it out since it is a chip stock and we are seeing semiconductors up a little bit in the pre-market. Enphase, which is in the solar industry, is taking a massive hit. After yesterday closing at $36.70, it is now trading around $32.40. That's a big drop for this. This is well over 10%. Now, the question is, where do I start to look to trade it? And for me, at least, I'm going to go at the low end here. It's only $2.40 lower, the even number of $30 right here. This is also a gap fill in technical analysis. So you have a gap fill plus a double bottom. That would be a day tradable level. Now, some of you guys might be thinking, well, what about a swing trade? I'm not going to go near this as a swing trade, even though it's been beaten down immensely. I think for me on a swing trade basis, we'd probably have to get into the low $20 range before I start taking a shot here. Now, take a look at this one, guys. Holy cow. Fiserv is getting trounced, down almost 40% in the pre-market. And what's amazing about this, just like Enphase, this one was trading basically at multi-year lows. And so this stock is getting crushed. If I zoom out, look at this. We're coming all the way down here. I mean, look at the drop on this thing. This stock in February was $240. It's now trading at $76 a share. Now, what's interesting here, folks, is that I do have a major support, and we are very close to it. Anything between my zone here, you can see this pivot low right there, right? So this pivot low going back, this is, by the way, this was the COVID low when people thought the world was ending. That's where it bottomed out. So we're actually coming into that level. And again, this level is basically 70, we'll call it 74 down to about 69 or so. That's going to be my zone today to focus in and start looking for a long trade on Fiserv. But this, my friends, this is a massive move. Again, for a stock that's basically trading at 52-week lows or multi-year lows already, to drop 40%. Now, granted, they did miss earnings. They missed guidance, right? So they lowered guidance. They missed earnings and revenue. So it was a pretty bad report. But a stock already trading at these levels down 40% more, I, as a technician, am starting to hear alarm bells and saying, okay, start looking for an entry on a technical chart basis. And so that's what I'm doing. This is going to be one of my top focuses in today's trading day. All right, a couple others. Verizon reporting earnings. Verizon's actually moving up pretty nicely here. This is another dividend payer. I'm noticing that these quality dividend payers are almost all going up, right, on earnings. And so Verizon's another big one here. Notice it was basically trading in a sideways chop since early 2024. So about a year and a half of sideways chop at the low end of the charts, gapping up on earnings. You have a lot of these stocks. We talked about Keurig, Dr. Pepper, KDP. We talked about other names out there like UPS yesterday had a big move on earnings. That's a big dividend payer as well. And I continue to be a believer in names like Pfizer. I mean, Pfizer, again, was down a little bit yesterday, but I continue to like that on that same kind of front. They report, by the way, earnings next week. Caterpillar reported earnings. This is actually a pretty big move for Caterpillar. Yesterday closing at 524 and change, trading at 554 or so. If we look at this, I have a beautiful parallel zone here. Now, notice we've been basically at the high end, and then it comes to the low end. And then we went back to the high end. It came back in. It's going to be gapping up. My short level is going to be today right around 564 on Caterpillar. It's about $10 higher than current price. On a $500 stock, that's not a big move by any stretch. So again, we get up to 564 or so. I'm going to be looking for a fade on this chart for a pullback. Okay. Etsy also dropping, although you could see pre-market, it's getting a little bit of a bounce, but a nice fall on Etsy. Yesterday closing around $75, trading at $69. That's not a huge move on Etsy. You can see Etsy has been generally coming off of its recent lows. It was down a lot, coming back up. It's coming back in. In terms of a trading level, the only thing I see for a day trade, and by the way, again, not swing trade, just day trade for me. And remember, I'm only speaking for myself as a trader. This is the only level I see here today, somewhere around $65. If it gets down to 65 or pierces, that would be something of interest. Here we have Garmin. Garmin getting trounced on earnings yesterday, closing around 248. Again, big drop to the downside on Garmin, coming down here, trading around 220. If we look at the daily chart, this one, again, you can see how big of a drop this is from where it's trading pre-market. My first level, in fact, this is more of a zone for me. You have this high and this low right through here. So again, if we look at that as a zone starting around 214.5 down to about $211, that zone here should be big support on Garmin again for a day trade. Now, again, on a swing trade basis, I'm not going near almost any of this. The only thing I would go near is FI. And the reason I say that is because on the daily chart, I mean, you're literally going to be trading at levels you haven't seen since 2020 and going back to like 2018. That to me is beaten down. That to me, I would think about tucking away as a swing trade at these levels. But all of these other ones, I mean, like an Etsy, a Garmin. I mean, these would have to have a massive move, because if you zoom out on this Garmin chart, look at how high it is still. Even with the drop today, it's still massively up. Like maybe I'd start getting interested around like 175, this former bull market high from 2021, maybe around there. There's also a gap fill just a little bit below. Other than that, I'm staying away. All right, Bitcoin here, folks. So what we've been watching is we recaptured that major trend line. We closed above it. For 2 consecutive days, I've been watching to see, does Bitcoin confirm a break back above that level? So far, the answer is no. And that is telling. That tells me something, right? Now, listen, if it changes its mind and decides to confirm, okay, that's okay. But yesterday, or so, here's your close back above. So remember, once you close and confirm below, so here's your close below, here's your confirming candle. Once you confirm, once you close above, it doesn't reestablish this as major support where you would start expecting upside until it reconfirms above. If it confirms below a line, it must reconfirm above to solidify, right? Think about it like hardening like concrete as a level once confirmation occurs. So the key here is, yes, 2 days ago on Monday, we fell back down. We were above, fell back down. Yesterday, even with the stock market at all-time highs, Bitcoin still couldn't hold its gains and close negative. Notice we did come back to this line, and so far that's holding, but there's still no confirmation of a break back to the upside. So this, in my opinion, is still kind of in this kind of question mark warning zone. It's above the trend line, which is a positive, but it hasn't confirmed, which is a negative. A negative plus a positive basically zeroes out, and I wait for more information on this chart to really give me a high probability deciphering of the direction of Bitcoin or the near term. Remember, we're always talking about near term, and just a reminder on that, when I go over these charts, I'm basically looking out like a week, right? I can project out, if I go to monthly charts, weekly charts, I can project out 3, 6, 9 months. But for my purposes as a trader, I don't really care, what happens in 9 months. I'll deal with that when we get up to that period, right? When it becomes a week away or 2 weeks or 3 weeks away. For me as a trader, I want to know what's happening today, tomorrow, and maybe next week. That's it. That's it as a trader, right? All right. So just going into this, here's our gold chart. Remember, I added in the probabilities for you based on, this was the 90% chance that this level would hit, and certainly it did hit beautifully. This next one has a 75% chance of hitting, 60% and 50-50. If it does hit this 50-50 drawdown zone, that's where I start to really accumulate gold. This is the same pullback zone that in 1980 we pulled back to before a significant bounce in gold. So again, I'm really mirroring this, but it's also a key retrace to the former all-time high before this long basic consolidation and the massive move up. Now, today we are seeing a bounce in gold. That's not unusual, right? You hit your first target, right? This is support. You should bounce here. Now, the question is, do we bounce? We're going to find resistance right here. See, you had the big fall, 1, 2, 3. Now this becomes resistance around 4,100, just above 4,100. Let's watch to see if price gets there. Does it get rejected? My favoring is still that we're still going to at least hit this 75% chance at 38.45 on gold. Silver today, guys. Silver is having a small bounce as well. Remember, the top on silver coexisted beautifully with our bear market low of 2008, which is the financial crisis. Here's your 2020 low on COVID, your bull market high of 2011, and that's exactly where we topped out at. That helps me basically say that to you guys. I still showed this to you guys, and I said, guys, if we're going to top out on silver, this is going to be right where it is, and that's what's happened. Now, we have seen a bounce on silver. Yesterday, we were flat to positive. Today, we're getting a bounce. Same thing on silver. This is going to be your first big level of resistance right in here. Okay, so let's watch and see. We're almost there now. Can silver break through, or is it going to stall out? I also think the metals are going to get probably a big move on the Fed decision today, so just pay attention to that. Here we have an crude oil. You can see, again, this was support, 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 and support. We broke. We got back above briefly, then rejected, and then we came right back in. So you can see it's just acting perfectly on that chart. Again, I don't have a good read because there's just not a lot of risk reward. Like if you go long here, your upside resistance is here. If you go short here, your downside support is here. It's not a big move. We're talking a couple dollars in either direction. And so as a technician, I stay on the sidelines until I have a better risk reward assessment and a better chart setup. And then lastly, natural gas here, guys. If I can spell it correctly, that would be wonderful. Let's take a look. Nat gas is coming back in. So this is now getting interesting to me. So natural gas, guys, this really should be going down to touch this high here and pierce here. So nat gas right around 360. If it gets back to 360, I may decide to go long. What's the reasoning behind this? Well, we broke out here. We confirmed the breakout barely, but we confirmed it. And now we're retracing to the scene of the crime. This area with this gap fill right in here is going or should be major technical support. And I'm going to use that as an advantage to a probability of a bounce in nat gas. Now, that's only if we come back in here. I'm not going to jump the gun. If I miss the trade, I miss the trade. I've missed a million trades in my life. It's all about the ones that I actually get that are important, all right? So, again, those are the crux factors of today. But remember, you have Fed decision at 2 o'clock. You have 2:30 press conference. You have 4 p.m. Google, Microsoft, Meta earnings, along with others as well. But those are the big behemoths that will shape tomorrow's tech markets, I'm sure. We have Nvidia that's now north of $5 trillion. Tomorrow, we have the President Xi and President Trump meeting on trade. So there's a lot. I mean, listen, the next couple days to me shape this market probably for the next month. All right. If we end the week strong and ripping higher, then this market could float up next week and continue up. You'll have pullbacks along the way, but we'll see what happens. It does seem like there's this melt up going on, almost a blow off top in the markets where every day the last 5 days has just been up, Nvidia up. Everyone's announcing an OpenAI deal. Everyone's announcing $600 billion, orders or backlogs or this and that. And ultimately, again, the power of that can only lift valuation so far before these stocks actually are valued at where all of these contracts will put their valuation in like 5 years. And so these are going to be things to watch. All right, I've got to get going to my trading room, guys. As always, I'm here to break down the markets in these game plans for you. Remember what I say, if you find this useful, the technical analysis, the probability-based assessment, not only follow me on YouTube, follow Verified Investing, but then share it with someone out there. That's all I ask, guys. I'll bring my A game every single day. Won't mean I'm always right, but I'll give you the probabilities and the high probable trades. You guys are amazing. Thank you so much. I'll talk to you soon. Take care.